With the last week of the month approaching, there's plenty to keep market players interested in the next week. We'll speak to Bob Mason from FX Empire to see what we should be looking out for. This is the week ahead. Hey Bob, thanks for joining us as always. Always a massive pleasure to speak to you. Let's get straight into it, shall we? The last week of the month is approaching. Are there any data sets to be expected or anything in particular that traders should be looking out for?
Yeah, it's a busy week ahead on the economic calendar. So we've got second quarter's GDP numbers to focus on. That's coming out of the US and EU member states, the likes of Germany, France, Spain. So that'll give an idea of what kind of, state the economies are in going into the third quarter. And then we're going to be looking at July, economic indicators. We've got unemployment figures out of Germany. We've got consumer confidence figures out of the US, durable goods orders out of the US. Retail sales figures for June out of Germany and France. These are key numbers. So consumption, confidence, and employment. These are the areas that we need to focus on to continue to believe that this economic recovery is going to continue in spite of this spike in COVID-19 numbers in the US. So expect those to be the key drivers. Obviously, for the US, you've got the weekly jobless claims on Thursday as well to focus on.
Meanwhile, Bob, is there anything happening in Canada, Australia and New Zealand?
Yeah, for the Aussie dollar, Kiwi dollar and loonie, it's a relatively quiet week ahead. For the Aussie dollar, we got inflation figures for the second quarter in focus. Don't expect too much influence from those. We're looking at employment and consumption figures really, and consumer confidence, the key drivers near term in terms of economic indicators. For the Kiwi dollar, there's not much to also consider in the week. And for the loonie, we got GDP numbers and RMPIs. So really, I think the key for these currencies is going to remain COVID-19, progress towards a vaccine, geopolitical risk. You've got US and China tensions to consider. So those are and then obviously fiscal stimulus from the US and beyond. So those are the key areas to consider in the week ahead.
Absolutely. And elsewhere, Bob, what about their neighbours, Japan and China?
Yeah, for the Japanese yen, you've got retail sales and industrial production figures. These are June figures. Economic indicators out of Japan have been quite dire, really, particularly on the consumption front, suggesting that consumers are not buying this economic rebound. And there's no bounce back that we've seen, in the likes of the Eurozone in the US and the UK. So industrial production and retail sales, those will be an area of focus. Will it really impact the yen? Probably not. Obviously risk sentiment remains key driver. And then out of China, you got July NBS, manufacturing and service sector PMIs. Those will provide further indication of how that economic recovery is going. Markets didn't like the retail sales figures, so these are going to need to impress to avoid risk aversion across the markets.
Absolutely. Bob, finally, just to finish up, could you comment more on the fundamentals of the UK, US, and also this big stimulus package from the EU?
Yeah, in terms of fundamentals, I think for the US economy, you've got, obviously, has the Fed and the US government done enough to support, the economy and the materially high unemployment rate as a result of COVID-19? We've got this second wave of the COVID-19, we've got stimulus that's needed again as the unemployment benefit claims support expires at the end of this month. So if congressional wrangling continues and there really is a delay in delivering funds, to the needy, then that's going to really impact on consumption and weigh heavily on the US economy. And let's not forget that vaccine couldn't come quickly enough. For the pound, you got Brexit, there's talk of, there's negative chatter again. Then you got plans to hold off on a US-UK trade agreement until, after the US presidential election. So that's a negative as well. So yeah, the pound's seen 127s really as a result of improved risk sentiment. But Brexit and, trade terms really, and the fact that the UK economy has struggled a little bit, despite the bounce back. Those are the key areas to consider. For the euro, the EU Recovery Fund was, pretty fantastic, really, and they managed to, agree on the terms of the EU Recovery Fund. So that's going to be key for the euro and driven euro to 115 levels. So the grants, they agreed to reduce from 500 to 390, and the loans from 250 to 360. And there is a break clause for grants. So if there's a misuse of funds and they're not used to support economic recovery and that meltdown as a result of COVID-19, then that grant system would be halted. That's something, to appease the more miserly member states of the EU, such as, the Netherlands and Austria and so forth. So those are the mechanics. And obviously you got the EU budget as well, which is more than 1.8 trillion euros, and that's over 2021 to 2027. So that's quite a chunk of change to support that economic rebound. And that should support, euro growth and upward momentum, near term to bring in sort of 117 levels at least.
Fantastic. Thank you very much, Bob. Pleasure to speak to you as always. Look after yourself and we'll see you again very soon indeed. And thank you everyone for watching. If you want to find more content like this, head over to dukascopy.tv and you can find plenty more across all our social media platforms as well. Take care. See you next time.